Hi, it's Simon Clarke from American Lithium. I'm here at PDAC and stopped in to see the guys from Crux. Good to see you again, Matt.
Thanks for coming along.
Great to see you, always.
Now, we have been pounding the streets for a long time. Were you down at BMO as well?
I was, yeah.
Oh my goodness. That's a long
It's been a crazy start to the year.
So what do people make of the lithium situation at the moment? Prices, what, 80,000 back last November 22, down to as low as 12 in December. Price discovery is needed.
It's a roller coaster.
It is a roller coaster.
I mean, for me, I've probably been frustrated for about 18 months because when it went up to 80, no one believed it. So I shouldn't say no one, the strategic side of the space and the M&A side has been strong for a long time. They get it, but in the main markets, people are still sitting on their hands, and they were sitting on their hands at 80, and they're now sitting at their hands at, what is, 12, 14. I guess it's bounced a bit to 14, trying to figure out when the entry point is. So you're never going to time the bottom, but I think there's a lot of good companies out there that are seriously undervalued if you believe in the thematic. And, yes, maybe less EVs sold than people thought last year, but still a good trend upwards.
35% up.
Yeah, so it's a little weird to me. I think it's overdone, but all we can do is stick to our knitting and try and move things forward. And I mean, last year, you think about it, we added about $7.5 billion in NAV throughout the year, and the market yawned, and we went from close to $5 a share early last year to $1 at the end of it. So, but we were in line with everyone else. Yeah. So misery loves company, and as I say, all we can do is continue to move the projects forward, because at some point, I think we'll see it revert.
Okay, so I think it's a nascent industry in that sense, and like I say, price discovery is needed, and that can only come through industry players doing what they do. Benchmark, is sort of forecast, the long-term forecast somewhere between 30, 35. So there's some ways to go to recover, but I hope we don't see that crazy hockey stick pricing. It's just no good for the sector.
I think until it matures, you're probably going to see a little bit more of that. I'm not saying it's going to go back to 80, but you're seeing production shut in, you're seeing development stalled, and that's the obvious stuff. But the less obvious stuff is the explorers who can't raise money. So it will have an impact, and it'll throw it back the other way, and we also need to develop more of a Western price, which I think is coming. You've seen Benchmark talk about it. You've actually seen, I think, his SP Angel start to quote. And that's more realistic for companies like us, whether you call it ESG or whatever. But, the Chinese, it's still, the refined side of it's still dominated by China. And whilst that's the case, they can destock and restock when they choose. BYD effectively got a big subsidy from the Chinese government, which has allowed them to become the dominant player in the EV world. They've taken over Tesla. You can buy, Matt, for you, a $282,000 BYD that takes on Ferrari. Okay. Or you can buy a $14,000 entry vehicle.
I'm happy with my classic cars. Thank you very much. Old school V12. Very happy. Yeah. For now. Look, I guess the one. I'm kind of frustrated about it. So when you say, unfortunately, exploration companies can't, get the money that they need, I'm like, good. There's way too many of them. Last year, people jumping on the bandwagon. Some of them caught the wave into the downward trend early in the year, and some still new lithium companies coming through towards the end of the year. I was like, it's too much. I don't like it, because you've got retail who think, this could be the next big thing. They're talking a good game. But some of these companies are never, ever going to be able to kind of work through this very sort of technical metal called lithium and get it into production. Maybe that's not the game, but it's not good for the sector as well. So whatever's going on in industry in terms of inventories and price movements, et cetera, is one thing. But also the equity side of the equation has been very, very confusing. What did you make of last year when you're seeing these people come through?
Yeah, unfortunately, if you do believe the thematic, even on a lower growth rate, say last year's is the norm, the amount of lithium you still need by the end of the decade is several times higher than it is now. So, and you know what the statistics are. What is it? Something like 1 in 100 exploration plays actually find and develop a deposit.
Way, the numbers so far. We're quoting and 1 in 3,000.
Yeah.
And that was done by an Aussie analyst.
Okay,
And
so I'm way out of date.
3,000.
Yeah.
I mean, that's how hard it is.
It's
so I
very
appreciate
hard.
it's hard, but I also want to back teams who've kind of been there, done it before, or you can actually articulate a plan and strategy and have the right people to deliver that strategy and have access to money. Then I kind of feel it will move through the phases, but all too many
and on the flip side of that, Matt, I guess that's why it's not that I'm not concerned. Of course I'm concerned. You never like to see the commodity there, and you never like to see our stock price where it is. And there's only certain things we can control, however. But the fact of the matter is we know we have 2 very large lithium deposits and a big uranium one. So, you know, I guess we are that 1 in 3,000 in terms of we've identified them.
Yep.
Now it's more about, you know, obviously finishing off the development cycle on them and, you know, and then pushing them through. But, you know, we are asset rich. And so, you know, that certainly helps me sleep at night. There's a lot of interest strategically in our project still. And, you know, this isn't the time necessarily to be taking an offtake when the price is as low as it is. But, you know, I do think you're going to see, it's funny to me because you look at the strategic landscape and you get companies that you would expect to be aggressive being very conservative, like Albemarle. I mean, it's kind of like they make so much cash flow, and I really commend how they look after their capital. But, you know, the other side of the coin, they lost out on Liontown. Surely if you believe in the thematic, you would be out there making acquisitions at this point. And some are. You are seeing more coming back into it.
Zero.
Sorry?
The Aussies.
For sure. You know. For sure. And there are others, you know, other strategics that are there. And I think as the sector turns a corner, that's going to really pick up quickly. That's what happened on the last cycle. And again, I think the companies that are going to be well positioned as we come out of this one are the ones that are able to keep moving their projects forward. I mean, obviously, you've got to be smart with the capital you have and you know, spend it wisely and continue to try to move the projects ahead. And, you know, that's what we're looking to do and hopefully be well placed when things do turn. And I think for us, you look at us, we went on the NASDAQ last February, and we were really pleased with ourselves, you know, faces on Times Square, this is great. And, you know, what you find out is in those big markets, yes, there's a ton of liquidity, but when the Fed is doing what it's doing and the risk-off trade is doing what it's doing, despite the 10, 15 companies that are driving the bull market, the reality is everyone else was struggling, and then you get lithium selling off, and you know, so you end up with a ton of people shorting your stock. I mean, that's effectively what happened. So, you know, but at some point here, there's going to be a massive short squeeze in these stocks as well because they're way oversold. I mean, we're 9.3 billion in NAV or something, or maybe more with all of our projects, and I don't know what we trade at to that point, 0.00 something. So at some point there's going to be a big correction, and I do think in a number of these big markets you'll see a lot of short squeezing as well.
What do you think about U.S. elections? Because obviously it won't be resolved towards the end till the end of the year. Does that halt things a bit, slow things down a bit?
You know, I don't think so. I mean, markets hate uncertainty, so you know, and I think people are really uncertain as to if it is Trump, what's going to happen. To the Inflation Reduction Act and some of these other things. And I think people forget in his presidency, you know, they rushed through the permitting of Thacker. You know, I think the big catalyst for us right now in the claystones, which are seen as unconventional, but actually are much more akin to a conventional mining project than processing a spodumene or a brine. You know, but I think you're going to see claystones because they produce a high purity product that doesn't have to go to China, I think you're going to, once the DOE funds Thacker, which I think it's pretty much everyone knows it's coming, that'll help the claystone side of things again. And then I think, I think Trump is typically America first, so that I think could be good for domestic lithium. It may not be as good for us in a place like Peru, where the Inflation Reduction Act applies because they're a trade partner. I don't know what happens on those kind of things. But in general, the DOE has all this money anyway that it has to put into projects. So I think on the domestic side of things, it'll be fine, and it'll be interesting to me how they bring it into the election campaigning. We know whether they do or they don't. The Democrats, I think, have tried to do a decent job on it, but the permitting side is still a huge side that they didn't address in the US, and I think that's actually where Trump could help.
Right. I'm sure we'll be watching the TV very, very
closely.
Oh yeah, loved it last time round. I don't think it's going to be any different this time round.
It is classic viewing.
Good viewing, good TV gold. Let's kind of. I want to come back to the PEA that you put out a couple of weeks ago, but uranium, right?
Yeah.
Uranium has had a great run last year, certainly on price, and equities have benefited at various stages. Certain equities have benefited at certain stages. It's had a little pause now. We're sitting around 95, 96.
Yeah, I think the long end of the curve's still going up though.
Oh, I hear you. But it's like a little pause, quite nice, very good. Let's see what's going on with supply. If we can start to understand that, would be helpful. And if it goes again, it's a very different environment from the beginning of last year, right? So in terms of, when did you call off the Spinout?
We thought that was. We launched it, I think, in June.
June, yeah.
Maybe late May.
Pre the run
And
up.
it probably wasn't the right time. I mean, the Fed was doing what it was doing, and but I mean, the nice thing for us is, we didn't have to do it, and so we tested the market. And uranium had moved up to $50, and the market had been strong, but it was. Yeah. Moving into the summer, it probably wasn't the right time. I mean, I think we could have got it away. That's certainly what we were told, but the deal may not have been what we wanted, and we also want to get long-term shareholders into this thing. Yeah. So we pulled it and we went away and we thought about it, and I still think a spin-out is the right structure because I don't think.
I think it is. I agree with you. I don't think anyone disagrees with that thought. Yep. But it's a question of timing, because you want to capture as much upside as possible. You're not obliged to. You don't need to, etc. But where do you see this? We've settled for now. Where do you see this uranium market going? What does it need to look like for you to be able to make a decision? Do you think?
I think for us we're pretty much at that decision. Okay. It's just, it's not straightforward because you want to structure it right as good as you can, and we've learned from last time. You want to make sure you have the right team in the company to drive it forward and all those pieces. And I think we're pretty much there in terms of what we want it to look like. Okay. And yes, there's been a bit of a pause. So I think it's you wait and again, as you point out, there's no massive rush on it. And all the signs and everything I'm hearing is it's going to take another leg up sometime soon. Yeah. And I think for us it's just making sure we're ready. Don't forget, this is a project that is the other side of the hill from Falchani, and communities that we respect deeply and have good relationship with. So we want to make sure it's done right for them. And but I think definitely there is no doubt. We've had people offering us money for it, but you're never going to get the right valuation for it in a strategic kind of deal within American Lithium. Mm-hmm. But if it's in its own vehicle in the market where you see developers getting 0.7, 0.8 times NAV, and don't forget the last PEA is outdated, but we think it's going to get stronger from here, and that was $600 million at $50. So, I mean, you apply $75 to it, it's 1.2 billion.
Yeah.
If you went to 100, it would be 2 billion. So it's clearly an asset that in this environment should do really well when it's in its own vehicle with its own team. It's ready to pilot. We want to do a really big drill program there. We think we can potentially double the resource. And you know, we're in the process of updating the PA for it already, and I think that'll be ready around the time that we'd like to see it launch. Okay. So, you know, that brings in tank leaching, it brings in pre-concentration, both things which should make the economics even stronger still. Okay.
We'll come back to that near the time, I guess. Okay, so for now, the TLC, talk to me about the clays again, because I've spoken this week to DLE, we've got hard rock, we've got brines. We've spoken to lots of, and they're all the best.
Oh yes, yeah.
So tell me what the role that you think clays has got to play in terms of, you talked earlier about the sort of simplicity of it all.
I think people over mystify the clays because there's been no production from them yet globally. There have been successful pilots, obviously. I mean, you got Thacker building a mine. And you know, there was a lot of work done on Bacanora, for example, in Mexico, although who knows where that is now. Really, I mean, we're miners, so we wanted to avoid anything that involves black box. So we've stayed away from DLE. I think DLE, when it comes, can help. I mean, obviously, right now, people seem to be focusing it on the Smackover in Arkansas and Texas, where the grades are highest for brines. It's still way below what the claystones are. But we wanted it to be conventional. So, you know, as you know, in our testing, we think we know we can use hydrochloric acid as well as sulfuric. Best one of all would probably be a roast, but there's no gas in that part of Nevada. I think there ultimately will be. So there's choices, and what I was simply trying to say, and I don't take credit for it, I think it's Jonathan from Lithium Americas who says it's just engineering. You know, yes, you need a lot of filtration because it's a very fine sedimentary deposits. I mean, think about it. You've got all the big gold players in Nevada are dealing with sedimentary deposits. So it's a lot of filtration, and there's lots of impurities. Fortunately, where we are, there's nothing really deleterious. I mean, you have to deal with a lot of magnesium and other things. And as we optimize our flow sheet, it's really around minimizing lithium losses at that phase of it. Yeah. So what I mean about all engineering is we're comfortable that an acid leach, we get loads of lithium in 10 minutes. But it's then how do you take out the impurities and get it to the point where you have a high purity product. And that's what our core flow sheet does. And you know, the acid consumption is high, and we're working on how do we reduce that, how do we optimize things. And you know, 7,400 a ton puts us at a decent spot on the cost curve, but we think it can be better still as we optimize it.
Right.
So,
okay. Yeah. Okay. And the PEA, so if we talk about it, what does it do for you? Because I think clearly the overarching issue for you and your peers has been lithium price in a existing risk-off environment for equities. Okay, so it's not just a lithium thing in that sense, but the lithium layer on top of that has really just made life very, very difficult. And the fact that I guess also there's lots and lots of competition. There's lots of people saying the same thing. So, what's it going to take this year from you? What do you focus on these things as genuine value, not temporary respite?
I think for us at Falchani, the PEA it made sense to do it because the old one was 3 or 4 years out of date. Yeah. And it's an obvious step on the road to PFS. I mean, we have to update vendor quotes. CapEx and OpEx anyway, which we did. You know, CapEx only went up by 17%, which compared to some, you know, was a great result. And OpEx moved up 25%, but is still at 5,000. That's a real number. And today's cost curve, there's a lot of projects still that haven't published new reports, but even at 5,000 a ton, it's one of the lowest on the planet. So, for us, it's PFS. Over the next several months here is a big piece, and we will also look to do some piloting this year. We've been looking at optimizing. What I would say is so we have the base flow sheet which focuses on lithium, and the core numbers in the PEA are based on that. And to our mind, that's pretty well baked, and so we'll probably do some piloting on that. But we've evolved the flow sheet now where we're looking at countercurrent, which significantly reduces acid consumption. Again, it's a little high on Falchani. It's probably our biggest cost. And we want to bring in SOP because we don't make a load of money on it in the economic side of it, but socially in Peru, it's a huge piece because they import pretty much all of their SOP. And, depending on exactly which stage it is at and how you do it, you can produce 80 to 120,000 tons of SOP of high quality. So it's going to be really important. It's nice to have a project that doesn't just benefit mining, but also the agricultural sector. And then cesium has been a little trickier for us to figure out.
It's just engineering.
It actually it is, but it's you have to optimize and refine, and you don't want to reduce your lithium losses, and you do want to reduce them. You don't want to damage your recoveries on the lithium side. So, we've spent a little longer on that, but I think we're starting to get where we need to. So that'll be refined, but I think in the short term we'll probably look to pilot the base flow sheet at some stage.
A bunch of stuff coming out this year. And you got to and you'll do that. Price discovery will happen in its own way, own sweet time. But you've got the money to advance things.
Yeah, we're solid. We're not going to be stupid. As you know, we have some liquid investments as well. They're strategic though. So as I say, we're going to keep moving the projects forward. Spend our money wisely. Really look at what's going to make the most value in the short term. And I think the PFS at Falchani and the piloting, and that's not to say we're not continuing to move forward on TLC, where it's really, as I say, flow sheet optimization. But I think there's a lot of bang for the buck on Falchani. And don't forget, we filed our EIA very early in the process. So once we get to PFS, we're into permitting a mine. And then we have to look at, we need 681 million. Even if you assume conservatively 6 months mine permit approval is 12 months, you can be at FID at the end of next year, which is pretty quick. So, obviously we're looking at the strategic angle with Falchani, and, but in the short term and in these markets, let's just continue to move it forward and de-risk it. And like I said, if you analyze the last couple of cycles, the companies that have done well as they've come out have been the ones that have been managed, and it sounds obvious, have managed to advance their projects in tough times.
You better get out and do it.
We'll try, Matt.